This is the last edition of Frontier Opening Bell for this week. I'm Temple Ashaji. Thank you for joining us on the show. With us on the program today, we've got Ali Kansachu of Rich Frontiers Management based in Nairobi, Kenya. We have Luke Ofojebe as a team lead for equity research at Sarwa Capital Management. Thank you for coming in on the program. Boson Mofaye, executive editor at Frontier Africa Reports. Thank you for joining on the show. Quickly, let's check in with the market status from the way they settled yesterday. Nigeria, pretty much all these markets are in green except for one, which you get to those shortly. Nigeria, very positive, 0.78% at last minute trading. BRVM was up 0.09% on Thursday. Egypt, which represents the where we have the Egyptian Stock Exchange, was marginally up 0.01%. In Kenya, 2.46% surged on Thursday. That's the data we have for now. And of course, South Africa was down 0.41%. That's about the only markets that experienced a southern close yesterday in the market. Let's now look at the Eastern African headlines, where we have the Treasury in Kenya looking to raise some 18 billion shillings in bond on the bond sale that was underbought at the last session. Then you have the Kenyan Electricity Generating Company bagging some 709 million shillings deal to drill geothermal well in Djibouti. Now, Safaricom is paying the very first interim dividend of a total of 18.029 billion shillings for the year ended March 2021. We understand that will be paid sometimes on the 31st of March or thereabouts. Rwanda, a couple of stories from that country shows that they registered some $1.3 billion investment in 2020. But that was a decline of 47.1% compared to what we had in the preceding year. Now, Rwanda is also to increase the 2021-2022 budget by $220.8 million to $3.4 billion, all the way from $3.2 billion. Ali, let's come to you with these headlines. I mean, what do you make of them and how significant are they?
So let me first start with in the headline figure you showed about the Nairobi Stock Exchange jumping more than 2%. And that was driven by the announcement by Safaricom of this interim dividend, which was actually unexpected by the market. That ranked the price to a fresh all-time high. Safaricom is close to 60% of the market cap of the Nairobi Securities Exchange, and therefore whither Safaricom goes, that's where the Nairobi Securities Exchange tends to go. So very positive news, excited shareholders in the bellwether stock here in Nairobi. They have tremendous cash flow and obviously made a decision that the cash flow justified an interim dividend. I think the market, as you can see, got terribly excited. The Kenya government, which recently announced a supplemental budget of about $1.4 billion, and that probably tapered interest at the previous underbought February bond sale. And I think now that that number is out there in the public domain, the Treasury's come back to see whether they can tap some more money. The local market has been a good pool of liquidity, and what we've seen is curve extension, people moving out of the short end of the curve into longer dated bonds and basically running what is some very handsome positive carry. Longer dated bonds are paying you about 12%. The interest rate is around 7%. So, you've got a pretty chunky carry trade that you can put on. NGN, which announced some very good results a few weeks back. This is an important development. They have tremendous expertise in the geothermal space. Djibouti, by all accounts, has a lot of geothermal potential. And, this is a very positive development for the company because it shows that they can expand beyond Kenya's borders. They're also looking at Ethiopia as well. It feels as if it's a very underpriced share, has been for a while. They're also paying a dividend after a big dividend drought. So we should see more positive upside on that particular stock. Rwanda, 1.3 billion in 2020, down 47.1% from 2019. I think, you know, it's been tough for African countries in that pandemic year last year, and that's just reflecting that. Rwanda is probably, I think, the best. The market opportunity is not as big as Kenya, Tanzania, and maybe Ethiopia, but it's a pretty level playing field. They're pretty tuned in to what investors are looking for, and I would expect to see a good rebound this year, particularly. And finally, on the budget, this is in line with what everyone's been doing, an increase of, you know, 220 million. It's not double digits. And I think it's just reflecting the amount of extra spending governments have got to do in order to support their economies, and also for possibly the vaccine rollout, which looks as if people are getting much more earnest about.
Thank you very much, Ali. Luke, I saw you nodding your head earlier. Do you have any comments to add?
I fully agree with everything that Ali Khan said. I really don't have any contribution to this.
Okay, because you had the Safaricom interim dividend. I thought you wanted to buy into it, or you were one of those that pushed up the market yesterday, having bought some Safaricom shares. Bosun, any thoughts on all of these headlines from the eastern part of Africa? Looks like there's a whole lot of harmonization, convergence happening with the Djibouti story there.
Yeah, I think I love the. I just sit down here in Lagos, Nigeria, and I'm salivating over KenGen, and I'm sure Luke is also doing the same, as well as you are Nigerian as well, even though you're based in London. The fact that yes, we have a power generating company that is paying dividends back to the government. Look, if we're just honest and sincere about this whole process, look, no matter what had happened, 70% by the government equity, 30% by investors, list the same power generating company on the Nairobi Securities Exchange. You're paying government about 1.7 billion shillings in dividend for a year. Look, government will take that back, but in Nigeria, what do we have? The government is part owner of the power generating companies, of the power holding distribution companies. Money just keep going down the drain. The central bank is funding it, the federal government is funding it, the private sector is funding it, and everything is just going through a funnel just into the sea. You can't just find the money. So now you find KenGen getting projects in East Africa all the way to Djibouti at the Horn of Africa. That is how you need to run a state-owned enterprise, a public utility company that is doing business. And I'm sure Luke will agree. If we have our power generating companies, I think we have about 5 or 6 of them right now, behave just like KenGen, Nigerians will be a different story.
Right. Well, I think the government of Kenya actually still holds some 70% stake in KenGen too.
Yeah, that's what I said.
Okay, great. Yeah, so
that's what I said.
Just to be clear,
in Nigeria, it's about 40-30. I think about 40% in power generating and 30 or 35% in the discos.
Oh, okay, great. Good to have that clarity. Now let's move on now to the western part of Africa, where the Senate of Nigeria is summoning the central bank governor and, of course, the Director General of the Securities and Exchange Commission over the ban on crypto. Of course, last night, I think the Securities and Exchange Commission released a press statement on their position on the crypto ban and all of that. I don't think they are actually in support of it, but we'll get to find out how that pans out today or later on with their meeting from their meeting with the Senate. But the central bank is also to convert some 10 trillion naira, which is $25 billion of the federal government debt now to bonds, said the debt management office. Nigeria cannot avoid the manufacturing route, says Deloitte Davies. You also have a story from Ghana that says the Databank withdraws from Agyapa deal as a co-financier and, of course, advisor. Mali listing some 6.5% 2020 to 2027 bond loan on February the 25th. And, of course, Shelter Afrique is to pay some half-year interim dividend recap of 6.6% bonds 2014 to 2021. Bosun, let me start with you with some of these headlines from Nigeria within, and then perhaps to the external, to offshore, basically.
I want to speak just very briefly to the crypto thing, and I think I'll let Luke speak to a few others. I want to comment on the Ghana story a little bit later if we have the time. The story around the crypto thing is very clear, and folks are mixing the things up. SEC is a regulator, central bank is a regulator, but there are two different regulators. The central bank worries about the banking system, liquidity, exchange rates, financial flows, and all of that. That's the basic worry of the central bank. Regulation for the SEC is basically you have a product on the market. Is it licensed? Is it registered? Is there going to be fair practices in terms of trading it and all of that? That is all the SEC wants. So both of them are regulators, but they're not exactly the same type of regulators. So the cash flow, the money flow, the SEC is also worried a little bit about it, but not as much as the central bank in terms of how will it affect the banking system, because the banking system is a whole lot cash, near cash, quasi money than investment in stocks. You need to sell stocks or bonds before you can get cash in. The banking system is hit, the vault is empty before this evening, everybody queue up for their money and the bank is empty in 24 hours. That is not like for a company. Even if a company goes moribund for years, you could still have investors bring in new money, bring the machines back, put some oil, rejig everything, and it's back in business. So there are two different things, and I think they will all line up with the Senate and clear things up.
Great. Yes. Thank you so much for that, Bosun. I think the Securities and Exchange Commission has even made it clear that what they are out to actually regulate is digital assets and not just digital currencies. So it cuts across anything that has to do with blockchain and the rest. Luke, let's get your thoughts on this.
I mean, this is an interesting development, really. Like Bosun said, SEC is a regulator of capital markets. So it basically regulates securities and other stakeholders that participate in the capital markets, whereas the CBN regulates the banking sector and also ensures there is price stability within the country. So, I mean, from SEC's perspective, Bitcoin is a digital asset, and it's something that has been accepted by a number of economies as a digital asset, which people who are interested in these assets can actually just trade among themselves. Then for CBN, I mean, from what we've gathered so far from them, one is that it's more like a threat to the naira, even though they don't want to accept that. Secondly, because Nigerians are now showing increasing interest in digital assets, especially the likes of Bitcoin, Ethereum, and a couple of others. So it's more or less kind of taking liquidity away from the system and locking liquidity in digital assets that the financial markets don't participate in. And that, in a way, is affecting the ability of the CBN to support growth by ensuring that there is adequate liquidity in the Nigerian economy. The other one is being used for shady means, like for fraudulent transactions and the likes. But really, if we need to put it in context, I came across some data last 2 weeks where the total number of fraudulent transactions in fiat currency was more than the total number of fraudulent transactions in digital assets. And that's really interesting, and in both in absolute terms and in percentage terms. So, I mean, fraudulent practices will always be there. These are just they are reflections of society challenges, maybe unemployment rates, people getting frustrated and trying to find other means of surviving. Basically, we always have that coming to play, but that shouldn't really subdue the overall benefits of digital assets like Bitcoin. What I just think the CBN can do rather is, enlighten the masses on the risks involved in investing in Bitcoin and other cryptocurrencies. One of these is that Bitcoin at the moment is overhyped. Yes, it comes with great benefits, but it's overhyped. And because of that, you will continue to see that sharp volatility in the trading of Bitcoin. So it can be up 16% today, and the next 3 trading sessions, it will be down 40%. So clearly, that's not really a store of value. At the moment, it's more like a tool you can use to speculate on on how to gain wealth, basically. So that's what it is for now. So uh, given this, you just need to ensure that people don't expose themselves too much to cryptocurrencies. I mean, there should be some sort of limitations. Maybe you have a portfolio and you have just like 10% or 15% exposed to cryptocurrencies, as opposed to having up to 80% of your personal portfolios exposed to cryptocurrencies because of the sharp volatility involved. Then in terms of long-term play, what's it going to be like for Bitcoin? What's the outlook for Bitcoin over the next 10 to 20 years? Some are saying it's going to be accepted as a means of payment. So it can be regarded as a currency. Yes, that's a possibility. But if that's going to happen, then we are going to see a stronger, regulation of Bitcoin. At the moment, it's more like you can't really trace transactions in Bitcoins. But if we have strong regulations in that space, to some extent, I mean, at the end, it's just technology at the end of the day. And I always say technology cannot beat regulation if regulation really wants to be serious. So you can always find a way to tame, fraudulent practices when it comes to trading cryptocurrencies. That's what I think. So over the next couple of years, it's still not so clear if it will be accepted by a number of countries as a means of payments. Some central banks have already started, showing some sort of approval, but at the same time, the body language you get from them is more like it's a threat to their currency. So for now, it's still more like, people investing in Bitcoin are simply still speculating, even though it has great benefits. Then for the case of Nigeria, I think we already have a number of, investors, indigenous investors who struggle to raise capital to invest in coming up with exchanges for digital assets. So you just imposing a ban on the trading of cryptocurrencies all of a sudden, it's a negative signal to foreign investors. I mean, look at what we've experienced within the past decade. We've seen charges on deep water oil producers. We've seen the charges on MTN. We've seen the regulatory fine on MTN. We've seen the ban on registered motorcyclists, and now we are placing a ban on trading of cryptocurrencies. I mean, what message are we sending to foreign investors at the moment? That's foreign direct investors, people who are interested in playing for the long term. And let's not forget that this is a country that is still dealing with foreign exchange risk, and you are coming up with all these sort of bans. And the sad thing is that you don't even give like a period for them to to plan ahead, to come up with some amendments on how to ensure that the ban doesn't affect them significantly. You just impose it immediately. So that shouldn't really be. I think it's something the government needs to address if we really want to ensure that there is adequate inflow of FDI investments into the country.
Okay, then. Thank you very much, Luke. I know that Nigeria is not the only central bank that is actually placing a ban or giving restrictions.
Tempo, if you permit me, I know this is very Ali. With due respect to you, sorry, Ali.
5 minutes to go on the show. Or
yes, I know. Yes, we can. You see, the point is this: every central bank in the world could be panicky over cryptocurrency or whatever it is, and we all need to understand the economy we are in, which is called the Federal Republic of Nigeria. And so sometimes a bit of a historical perspective is always needed, sometimes to put this in context and folks to really understand this. When the market was playing the proprietary trading during the boom of the stock market, it took so many years for the banks to play a whole lot of games until Lamido Sanusi came in 2009, and 5 big banks went down in a single day because they were playing all the kind of kamikaze, whatever, on Broad Street with the stock market, with the equity market. We all knew what happened, and we haven't finished that mess till today. Nigeria's Nigeria's fiscal balance today is far lot more fragile than it was 10, 20 years ago. And we all need to understand that. Right now, Nigeria does not have any single, how much do we have in excess crude account? How much is our foreign reserves? So the central bank of 10, 20 years ago or 30 years ago is not the same central bank of today. Look, you need the vigilance, the level of toleration of anything that could tip the system over. Today is a whole lot more. The existential threat to the economy today. Look, the government has overborrowed. Central bank has printed about 10 trillion naira to the government, about 25 billion US dollars over the last few years, which now will have to be converted to bonds. That did not happen 20, 30 years ago. Our export proceeds 10, 15, 20 years ago was a whole lot stronger. Oil prices was better. Our production was better. There's no global system collapse as we have it today. So everybody needs to understand the sentiments of the central bank today, that look, the threat that you are talking about 20 years ago is not the same thing today. The central bank of 20 years ago could look at the buffers, look at the strength of the fiscal position. We've borrowed extensively. We're talking about 80, 85 billion US dollars in total debt for the country. So the banking system of when you have 180, 200 banks in Nigeria and 1,000 stockbroking firms, it's not the same as today. So we need to understand that an exchange rate of $50, 50 naira to the dollar is not the same thing as 400 naira to the dollar today. So the central bank of Joseph Sanusi in 2012 is not the same thing as the one in 2021. Let us get that straight here. And everybody needs to understand this background, that if we think that the toleration or the rate at which the central bank will respond today will be faster than before, because the economy and the banking system today is far more fragile than it's ever been. There is no way. Look at what the central bank has done. Look at the reports that the S&P and others. Look, Nigerian government today does not have what it takes to back any bank that is going down. Where is the money? AMCON is down with 6, 8, 10 trillion assets that they can't offload on their hands. If any bank goes down today, no matter how small, there will not be any means by which the government can fund it. So everybody has to behave themselves. And that is the point at which I think the central bank is coming from. The central bank is not against, look, our foreign direct investment is near zero. Diaspora remittances is near zero. Export proceeds are being taken out or being kept outside the country. So if I'm a central bank, I would say, look, I can tolerate this if I have $100 billion buffer. Today, I have 10 or $5 billion. Sorry, I will tell you, sorry, stop this right now. Let's talk about it later. I guess that's where the central bank at this point is coming from. So I understand how painful this will be, but I think we need to put that in context, please. What the state of the economy is too, and the finance minister said so yesterday.
Okay.
I'm sorry.
No, it's fine. Close to the last stop of the show. Let's move on to the Southern African market. Some of the key stories there will be the fact that Afreximbank is now to invest some $1.3 billion in Angola water and energy sector. You have the South African manufacturing sector output expanding by 1.8% year on year for December. And of course, very noteworthy here is the Air Namibia story, which has 104 million Namibian dollars debt due next week. And it has already put stop to all flight operation. Let me bring you in, Ali, to help us understand these developments happening in Angola from Afreximbank, South Africa, and of course, Namibia.
Yes, that was a very interesting debate. Can I just say one thing? I saw a short video from a Nigerian senator. I don't know if you all saw that on social media, where he said basically that the cryptocurrency world was beyond the control of the regulators. So I'll just leave you with that thought, because I think it's also important, just what can the regulators do? Coming to your Southern African headlines, Afreximbank, 1.3 billion, Mr. Aroma likes to take big bets on underperforming countries. He's got a huge position in Zimbabwe, and we still don't know what's happening with that. But this is an important development, and Angola has been struggling and is largely seen as one of the most at-risk countries of a debt reprofile. They have very large collateral-backed loans with China, and of course the oil price when they were doing those loans was considerably higher. South Africa manufacturing output expanded. We've seen a recovery. It's interesting, I was looking through their export profile. They've had a fantastic year in citrus fruits. Egypt and South Africa are big exporters. It's $1 billion plus revenue, and also they've been able to take advantage of this geopolitical roustabout between China and Australia. And you're seeing increased exports out of South Africa in terms of coal, in terms of wine. So we could see this manufacturing output expansion gather steam, in my opinion, in the next couple of months. Mining output up 0.1% year on year, but we should see a bit of an improvement given what's happening in commodity prices across the board. And finally, Namibia biting the bullet, stopping all flights. This is a big challenge for African airlines, who had expanded at a great clip in the last 12 to 24 months. Uganda, Rwanda, many other countries. Namibia, of course, is a tremendous tourism destination. But, the reality is, and I saw IATA also speaking about no recovery in 2021 for long-haul travel. And I think Namibia has just bitten the bullet, don't want to support the airline anymore. Here in Kenya, the government just gave Kenya Airways about $100 million of support. And really, with the exception of Ethiopian, most African airlines are going to need support this year.
Thank you very much, Ali. Let's conclude the show now with the Northern African line items that we have here. Orascom to sell some entire 29.25% stake in Sarwa Capital for 1.6 billion Egyptian pounds. You've got Akh Gold awarding some being awarded some 4 gold mining licenses in Egypt. And Morocco Financial Services Company so far buys 15% stake in the capital of Badel. Ali?
Yes, interesting headlines. I mean, a lot of activity going on in the Egyptian space that I can see. I mean, just to touch on Egypt, the big developments really were an enormous bond sale of Eurobonds, close to $4 billion. And that was interesting because I contrasted that with Ivory Coast. And I'll tell you what I think. Egypt there's an enormous appetite for Egyptian paper right now. They're paying very handsome spreads over US treasuries. Put aside the politics, the economics they're getting right, and the international markets are the signal in the noise, and they continue to support the government of Al-Sisi. Ivory Coast, I think, were just as clever, but different. What they did was they drip-fed. They didn't oversupply the market. They sold less than €1 billion, but they had an oversubscription, and they've kept the market coming back for more. So I thought that was an interesting contrast. Orascom, of course, is run by this very totemic fellow, Naguib Sawiris, and he's always trimming positions and increasing others. Big player in telecoms and, of course, in gold.
Thank you very much. If there's any other region in Africa, apart from Eastern Africa, that Boson is jealous of, it is the northern part of Africa. Give us your pick here.
No, I agree with Ali. For me, if it's good, it's good. If it's wrong, it is wrong. It's as simple as that, no matter on which side it is. That's the way. So you give it to Egypt. If they're making progress, they're making Africa proud.
Mm-hmm. All right, then. Finally, from you, Luke, any outlook for today? Any understanding of the market status, especially equity in recent time? I mean, the dip that we've been seeing lately is worrisome.
For some time now, like you said,
less than 1 minute for that, Luke.
Yes, you see more of negative sentiments in the equity markets, and that shouldn't really be surprising because a number of these stocks, I mean, before now, they were in their overbought region. So if there is no positive news to continue to support, positive trending sentiments, so it's very likely that we'll see investors taking profits. And also, this will be the pattern we'll be seeing for the rest of the year, given the fact that we don't expect foreign participation in the equity markets due to foreign exchange risk. So, and for these domestic investors, the majority of them are not long-term oriented. So when we see this the markets go up by maybe 5 to 10% within 4 trading sessions. The next couple of trading sessions, they start taking profits, and we start seeing that downturn. Secondly, by the 22nd of this month, GDP data for the fourth quarter of 2020 will be released, and consensus expectation is that we are going to see another contraction, given that the fourth quarter of 2019 was a strong quarter. So Q4 2020 versus Q4 2019, that should give us a contraction, and that might lead to another round of sell-offs in the equity market. So I guess some investors are already aware of this, and that's why they are selling now, to prevent losing more money when the GDP data is out. So maybe like 2 weeks after the release of the GDP data, we might start seeing positive trading sentiment in the equity market.
We'll see how that data is traded when it is released in the next 2 weeks. Thank you, Luke Ofojebe, equity researcher or team lead for equity at Sarwa Capital Management. Thank you for your insight on the show and all of this forecast guidance that you just gave. Ali Kansachu, CEO and founder of Rich Frontiers Management in Nairobi, Kenya. Thank you so much. Thank you always for making it down to the show. Bosun Omofaye, executive editor at Frontier Africa Reports. I appreciate your insights on Frontier opening bell this morning. This has been the show for today and the last for this week. Thank you for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye for now.